would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California. Member of the National Association of Realtors. But please, don't hold that against me. Well, it's been an interesting day. I mentioned last time we talked that I was going to be kind of putting out a system to embrace bringing guests on the show. So we do interviews, those types of things that would interest you all. And I had no expectation of the flood of folks who would be reserving time. So at least now I know the system works. Folks are able to reserve times. Nearly everything is booked for the next month. So we should start seeing a pretty regular stream of interviews. Maybe we'll trickle them out at once a week. Maybe we'll do them twice a week. I've got enough to last. I've got enough scheduled to last for a very long time. We'll see if that trend continues. But I want to thank everyone who stepped up. And I haven't even really made it public yet. I only sent it out to folks who had sent queries within the last, since January, really, to do interviews for the show, who sounded like they had content that would be appropriate for y'all. So anyway, likely to get some more interesting perspectives. There is one woman, and I apologize for not knowing her name right off the bat, but she checked all the check boxes on cool crap I would love to talk to someone about. She likes, and she's got a great story. She's got a fantastic story, as a matter of fact, which I'm kind of anxious to share with everyone. If I only have really just a sort of a glimmer of the short version of her story, but it sounds amazing. It sounds like it could be a great opportunity for those of you to learn how to really get going. She really is a start from nothing story in a relatively short period of time. But she's in Tennessee, and we've talked a lot about Tennessee over the last couple of years. And she wants, and her two things will be Tennessee, in which I'm sure Chattanooga will come up. She does a lot of stuff in Memphis, but she likes Chattanooga. But she also is a big fan of the lease option. So I can't wait to hear her stories about her experiences with lease options, because I know I've told all of you about them several times over the years, in terms of just keep making sure you're familiar with them and being able to spot those times when a lease option will work. So I'm super excited about that one. But as I mentioned, we've got a great lineup of different interviews for you. So I'm looking forward to sharing all that with you. It's going to be another day with some tidbits, but really our focus today is going to be on home flipping. The folks at Realty Track have released their first quarter of 2017 home flipping analysis. I don't remember this being a regular thing with Realty Track. Maybe I just missed it before, but this has got some great data in it. And house flipping, even if you're not someone who's a house flipper, I think it's always good to kind of keep it in the back of your head in terms of it being a possible strategy if it fits the market you're looking in. But if it doesn't interest you at all, if you're just not the kind of person that wants to do that sort of investment, fine. However, don't ignore trends in house flipping, because oftentimes these can be indicators into things that are happening in different marketplaces. So we're going to talk about areas where house flipping is the most active, areas where it's the least active, that type of stuff, and see what kind of interesting tidbits of data we can pull out of that might help us make interesting decisions in real estate that could potentially leverage us into a higher level of return in terms of how much we're investing. Before we do that, though, we're going to go ahead and dip into a few other tidbit items here. And before we do that, let me remind everyone to head on over to therebelbroker.com. From there, you can see the show notes for today's show, which means you'll be able to get links to any articles that we've talked about, or any of the data that we bring up will be linked in that article. You'll also find that you can do a variety of things there. One, you can become a member of the Rebel Underground. There will be a button and I tried to name it as clearly as possible. Click this to join the Rebel Underground, where you can get access to exclusive content. If you'd rather use your phone, your cell phone, you can text the word Rebel Broker to the number 44222. That's text the word Rebel Broker, all one word, no spaces, to the number 44222. You'll get a response that'll verify you've reached the right place. Simply follow the prompts, and then you will be in, and you'll get an email welcoming you to the group, which will also give you a link to the exclusive video that's currently only available to members of the Rebel Underground. Also, while you're there, you can click the big red button at the top of the page titled Take the Survey to Support the Show. When you do that, you're doing two fantastic things. One is a fantastic thing for me, and one is a fantastic thing for you. The fantastic thing for me is that you help support the show. You answer a handful of demographic questions, you provide an email address, and you're helping me get the tools I need to draw in the kind of advertisers that will make the show succeed, but also will be most likely to offer things that you will be interested in. And then the flip side is that you will then be put in a drawing for a $50 Amazon gift card. Now, we do this once a month. We just did it for the month of June, and we do it every month. And we've done it to the tune of $450, $500. So we've been doing this for a little while. And the great news is you don't just get into the drawing for the month that you submit. If you submitted your name into the Rebel into this list a year ago and you haven't won yet, you're still in the drawing every single time I do it. So you're always in there until you win. I've never drawn the same. I don't pull people out and then throw them away, but I've never drawn the same person twice. I'm not 100% sure what I would do if I drew the same person. I might not even notice. I might just end up paying the same person twice. But in any event, so there's that. So jump on over to the site, take care of that. It'll take just a minute out of your day, and you'll be doing a big favor for me, and you'll be giving yourself a chance to win that $50 Amazon gift card. Okay, with all that out of the way, amazing things happening in mortgage news today. There was something else too. If you looked at 10-year treasuries, or maybe just came across any of the news that's been out today and yesterday relating to what's going on with 10-year treasuries, they're down. Well, coincidentally, or not so coincidentally, interest rates for lending are also down. But what else happened today? The Fed raised rates another 0.25%. Now, let's take them both separately, and let's talk about the Fed first. And then I'm getting this particular update from the folks at Housing Wire. And they did what we predicted they would do. With each step that they are boosting things, they're doing it by 25 basis points. And 25 basis points is basically like a 0.25% increase, right? And that's really that is the smallest increase that they can do, or that they will do. But it did go ahead and do it. This will be the second time this year that it's been done, which means that the increasing the range of 0.25 to 0.5, and then to a range of 0.5 to 0.75. And now the range is 1% to 1.25%. So it's not a horrible surprise. I wasn't really estimating what they would or wouldn't do. I was actually kind of on the fence in which direction they would go. I actually thought that some of the indicators might have slowed them down, but I just don't. I think they need to show a certain level of optimism. But a 0.25, a 25 basis point increase is more symbolic than anything else. But it adds up, right? We're now over this year. We've increased it 50 basis points, which is a half a point. So take that for what it's worth. Quote, while the increases in rates by the Fed has been well anticipated given the progress seen in unemployment, low inflation and wage growth are still a concern, and we anticipate that we'll move forward cautiously in the second half of the year given the asymmetric nature of policy available to counteract an economic slowdown versus a nascent acceleration of inflation. And that was according to a gentleman named Ruben Gonzalez, who is an economist for Keller Williams. Okay, so with that taken care of, what we might see is a short-term, and this is the same spiel I've been giving every time. Should this spiel be the same every single time? No, it's really going to depend on what's going on in the various elements that make this up, like 10-year treasuries and how the market's performing in terms of real estate sales and those types of things. and how many mortgages are being underwritten. But this will follow the same pattern that we've seen in the past. In fact, it might even skip the uncertainty part. So whenever they raise the Fed raises the rate, what we have seen is a emotional response that causes a slight blip in interest rates. We saw it every time over the last 2 years, and I think there's been 3 different increases that we've seen over the last year and a half, 2 years. And each, except for we can't predict this time yet because we haven't seen the numbers occur for the day after. We've seen interest rates go up and then come right back down, and in other cases actually go lower than what the rates were before. And that's because everything sort of settles in. Everyone sort of realizes nothing exploded, and treasuries are still down. So that lending rate goes down. So I'm going to give you the same warning I always give when we're in this cycle. If you don't have your rate locked in and you are in the process of about to buy a home, and you see tomorrow when you wake up or the next day that interest rates have gone up some, if it were me, and given what we've seen historically, I'd wait a few days before I'd lock in a rate. Unless you're happy with it. I mean, if you want to have that comfort of knowing you have a locked in rate, and if it's still low enough that you're a happy camper, great. But my guess is that since we've actually seen 10-year treasuries go down over the last couple of days, and since we've seen what we've seen in the Fed, we might see a little bit of a blip in terms of interest rates. Then over the course of a week or 2, it will go back down. And in my opinion, it'll go lower than where it was before. So there you go. Keep that in mind as you're moving forward. It's totally up to you. I don't want you to blame me if the past history doesn't end up reflecting what happens this time. But in my own world, in my own purchasing, if I was in the process of buying and this happened to me, I would wait a couple of weeks. So there you go. And hopefully I'm right. I hope that it ends up being good advice for all of you out there. So we'll have a little bit of data there, and I'd like to share with you, and of course, as I mentioned, I'll have links to these articles on the website so you can check this out for yourself. I thought it'd be good to go down interest rates. We are still not really near the 52-week low range. We're still kind of right in the middle area. But I think things are still pretty darn sweet. We'd have to go down another 0.5 point for things to start really looking down towards that 52-week low period. Here's the thing. I don't think that's an unreasonable thing to occur. It would not surprise me if we were to hit our 52-week low of 3.4 or 3.34 is actually what the 52-week low was. But if we got to, it wouldn't surprise me if we got down to 3.4. Right now, the 30-year fixed rate mortgage is at 3.96, and it's down over not over 0.5 point. It's down over 0.06. It was at 4.02. The 15-year fixed rate mortgage is currently at 3.23, down from 3.27. Everything's down. Nothing is up. The FHA 30-year fixed is at 3.65, down from 3.75. The jumbo 30-year fixed, and by the way, that was the biggest drop, was the FHA 30-year fixed. And remember what we talked about. Remember that where FHA fits in. We talked about how credit ratings are being artificially boosted. We talk about how loans are now going to be written at 120% of the value of a home if you bundle it with your student loan. And remember, that changes the kind of loan that a student loan is. Now, this is something I haven't heard in any other articles. I haven't seen anyone else talk about it in relation to this move, this strong push to convert your student loan into a mortgage. Here's why this becomes particularly interesting. A student loan is an unsecured loan. Even if you declared bankruptcy, the bank or the government cannot come after you for your home, your car, or other assets besides garnishing your wages. All right? If you do this, where you roll your student loan debt into a home that is no longer unsecured debt, right? So it makes it debt that when you don't pay it can hurt you more, right? Because now it's linked to your house, so they can come and get it. So not anyone who's reporting on this wonderful new mortgage is really making those points. But you can go out and Google it. Go to any of the student loan sites. There's a website called Student Loan Hero. They've got a good little question answer thing, the pros and cons of what happens when you roll a student loan into a mortgage. But you're not, and these kinds of conversations seem to only be happening on some very specific places relating to student loans, not to this mortgage conversion deal. So feel free to check that out. I think it's super interesting, and I think it's also an interesting thing to note that it makes you more vulnerable. It makes the danger level of your debt higher when you convert that student loan into a mortgage. So keep your eye on that one. All right, so we just went over interest rates. Weekly mortgage applications to purchase a home drop 3%. But the new low interest rates are causing another resurgence in refis. And of course it is. When you see mortgage rates go down like they've been going down, you're going to see more folks going into refi. So if you start seeing people simply reporting that refis are looking, or that originations are looking healthy, realize that is not true when it comes to home purchases. And we're still seeing the dynamic of low volumes of sales, which obviously equals low mortgage origination, but continuing increase in prices. Although there are folks out there pointing out different softening markets, and some of them are talking about California as being those markets, and we'll obviously cover that information as we move forward. Okay, the next thing we're going to get into today is going to be the home flipping data. We've got a lot of interesting things to talk about, so we're going to take a quick break before we jump into it, but don't go anywhere. When we come back, we're going to get into some of this interesting data relating to how much home flipping is actually going on out in the marketplace and where it's happening, so don't go away. Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner, broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909. Welcome back, everyone. We have hit that portion of the show where we're going to talk about home flipping. Now, why is home flipping interesting to somebody who doesn't care about home flipping? Just like anything else in a marketplace, it's another data point. So if you start to see home flipping deteriorating or declining in certain areas, well, that tells you that folks who are doing that stuff are starting to see the top end of a market, or that marketplace has been drained of homes that lend themselves well to that. The first conclusion is usually the first one to verify, to go and check. If you're starting to see that, if a lot of investors who do flipping are suddenly not participating as much, if they're doing it a lot less in certain regions, you as an investor should at least have that in your head, thinking, okay, these folks don't see a lot more top end in terms of the growth in the market. And of course, remember, you've got two kinds of flippers. You've got flippers, and both of them will be drawn to markets with greater, what I call market momentum, meaning that the amount of property is going to be worth in 3 months is a nice, healthy increase, or in a year, or that the market's seeing appreciation. And there's two kinds. One only thrives in that kind of a market. They buy a home, they do very little to it, and they sell it in a few months later, and they just reap the momentum from the market in terms of what they're going to put in their pocket. Then there are the other folks who go in there and actually do a lot of stuff to a property to make it more, so that even if property value stayed absolutely flat, they would be able to turn around and sell that home for a profit because they've increased its appeal. They've dealt with all the obsolescence issues or all the aesthetic issues, whatever is wrong with the property, they're dealing with it, whether that's knocking down a wall or just doing all the aesthetic things that are needed to make it attractive, whatever. You've all seen the shows, right? So you get what the thing is. But the person, the investor who does flipping and does the I remodel it before I sell it thing, because they're trying to enhance the value of the property, also doesn't want to ignore the fact that it's also always helpful to have a marketplace where it's appreciating as you're holding it. Because the other thing is that in addition to concerns about the values that might be happening or how much homes are or are not appreciating, this may also be an indicator that those investors are seeing a slowdown in the number of buyers who are buying in those markets. So they're changing to other marketplaces. So it could be an indicator of two different possibilities: prices weakening and usually I think these two things tend to often go hand to hand, just not as many buyers in those markets. So those are things you're going to want to keep aware of. As someone who might want to buy and rent, well, why is that happening? Are there fewer people now moving into that area? Is there some reason that desirability has ebbed for that community that might also affect you as a renter? So those are good things to keep in mind. Now, I've got a link to the Realty Track article. Home flips in 2017, the first quarter of 2017, according to the article, accounted for 6.7% of all single-family home and condo sales during the quarter. And that's up from 5.8% in the previous quarter and unchanged from a year ago. So nationally, flipping has actually stayed pretty stable in terms of how much of it is happening. Now, we saw a lot of it drop. Flipping used to account for double digits in terms of percentage of the market, and that has really slowed down. And according to this report, for their purposes, a flip is defined as a property that is sold in an arm's length sale for the second time within a 12-month period based on publicly recorded sales deed data collected at ATTOM Data Solutions in more than 950 counties, accounting for more than 80% of the U.S. population. So it's a really good sample size. It covers the entire country, and the data is good to know. 1/3 of all single-family homes and condos flipped in the first quarter of 2017 were purchased by the flipper with financing. That's an increase in terms of the number of folks doing that. It was 33.3% this last quarter, and it was 31.9% in the fourth quarter of 2016, up 29.5% in quarter one of 2016 to the highest level since the third quarter of 2008, when 37.6% of completed home flips were purchased by the flipper using financing. Now, they had 85 metropolitan statistical areas with at least 90 completed home flips in the first quarter of 2017. Those with the highest share, originally purchased by the flipper with financing, were Colorado Springs with 69.3%, Denver, Colorado with 54.8%, Seattle, Washington with 51.6%, and Boston, Massachusetts with 51.3%, and Providence, Rhode Island with 47.3%. Quote, Seattle has such a high number of flippers who are financing their purchases relative to the U.S. as a whole due to escalating home prices in the region. The decision to finance is proof that these flippers believe the risks of financing are low due to the booming housing market. So now, granted, this is from a quote from Matthew Gardner. He's the chief economist for Windermere Real Estate, who covers the Seattle market. So kind of suggesting a robustness to the Seattle market is clearly a way to try to draw more attention to that marketplace and get more things going on there. But the basic point he's making here is healthy enough, that the folks in that market see enough upside, see enough growth, see enough demand that they are confident enough to leverage more when it comes to getting the work done and taking on loans and taking on that burden while they're getting that work done. Okay. Other markets where more than 40% of home flips completed in the first quarter of 2017 were originally purchased by the flipper using financing include San Diego, California at 46.3%, Minneapolis, St. Paul, Minnesota. Minneapolis, St. Paul has popped up on an awful lot of our reports for other reasons, and I can't help thinking it might be good to look more closely at that, but they had 46.2% of flippers using financing. Phoenix, Arizona, an interesting market, still considered hot apparently by these folks. 44.1% were using financing. Word I'm hearing through different articles that I've been reading relating to Phoenix is that market is feeling like it's at its top end. So it kind of surprises me that they're seeing that high level. And San Francisco, California, 43%, and Washington, D.C., 40.5%. I think the reality is that just because of the high prices in San Francisco, you're going to see more leveraging just because it's something you have to do in order to make things happen. In terms of the rates of flipping, how much flipping is going on, because remember, these aren't the numbers we just shared are not. It tells you one piece of data, which is not this is where the most flips are happening. It's telling you that the number of folks doing flips are getting financing to do it, are getting higher levels of financing to do it, which tells you the mindset of the investor at that point, that they believe that market to be worth it enough to jump in there and get more leverage, to get a bigger loan to make it happen. You want to look at how these markets are actually working. As I mentioned before, the San Francisco market, that is a market where I think you would naturally see a higher percentage of folks getting more leveraged loans for those, simply because of the price points we're dealing with. The average price in San Francisco remains, I think, over 1.2 million. So it just makes sense. The highest home flipping rates are in the District of Columbia, Nevada, Alabama, Tennessee, Maryland, and Missouri. Now, this is interesting because it tells you that there's just more flipping happening. The number of deals happening as a percentage of the overall deals is higher than other places. The District of Columbia had the highest home flipping rate in the nation in the first quarter at 10.7%. So 10.7% of the homes sold were flipped. Followed by Nevada at 9.8%, Alabama at 9%, Tennessee at 8.9%, Maryland at 8.5%, and Missouri at 8.0%. And I'll tell you, I was actually doing a little, every 2 or 3 weeks, I'll go through and I'll do a review of all the properties that I'm interested in, that I have searches running for in areas outside of my own. Several came up in Chattanooga today. I found one amazing 4-bedroom, 2.5-bath home, a little further east than I'd want. I'd want something maybe a little bit closer to downtown. Ran the numbers. 1% rule was fantastic. It was $100 over the amount indicated by the 1% rule. Acquisition price of about $180,000. Even putting down just 20%, it would be positive cash flow. Not a huge return on investment. It was about 9%, but that's not horrible. So, and that's assuming I pay asking price for the property. So I'm still a fan of Chattanooga. I'm really I would love to get over there and check it out. Okay, here's the next number, and this is a good number to know as well. The average home flipping returns decrease for the second consecutive quarter. So the average amount folks are making, the return on their investment, decline in the second for the second quarter in a row. Let's see. Well, you know what? And here's some numbers I skipped. Let me hit you with these first before we jump into that. And this is relating to the rate of flipping. Among the 85 metropolitan statistical areas with at least 90 single-family and condo home flips completed in the first quarter of 2017, those with the highest home flipping rate were Memphis, Tennessee, at 15.1%, York, Hanover, Pennsylvania. So these are drilling down to more specific areas. So this is more useful data. That's why I wanted to cover it for you, because this actually gives you a city that you can drill down to. And once you get to the city, you can use the video that I've made available to folks in the Rebel Underground to then be looking at that city and drill down to where you might want to look at a more neighborhood level in terms of finding an investment. All right. So Memphis, and remember, we're going to have a guest on. Memphis is home turf for her, so I'm kind of hot to talk to her about that. Is at 15.1%. York, Hanover, Pennsylvania, 12.5%. And here's one that kind of surprises me. Fresno, California, 11.1%. I don't know a whole heck of a lot about Fresno. Fresno isn't way, way far away from me, far enough that I'm not sure I'd want to mess with it. But I've never heard wonderful things about Fresno, so maybe I need to go take a look. Next on the list, Birmingham, Alabama at 10.3%, and Las Vegas, Nevada at 10%. So those are all areas, those are all the cities. Instead of focusing on the state level, we're getting more into nitty gritty in terms of focusing in on regions that you can more easily look at as an investor to figure out where you might want to invest your money. All right, so now let's get into the average home flipping returns. Homes flipped in the first quarter of 2017 were sold for a median price of $200,000. a gross flipping profit of $64,284, above the median purchase price of $135,716, up from a gross flipping profit of $63,500 in the previous quarter and a gross flipping profit of $59,100 in the first quarter of 2016. A new all-time high going back to the first quarter of 2000, as far back as the data is available. The $64,284 average gross flipping profit translated into an average 47.4 gross return on investment for homes flipped in the first quarter, down from an average of 49% across flipping. So you heard numbers that were good, that were increasing each quarter, but yet it was still a lower return on investment. And that makes complete sense, right? Because home prices are going up. So as a percentage of the amount invested and put into the project, it was lower because the initial cost went up. Okay. So they ended up making more in terms of overall dollars, but as a return of the money that was put into it, it was less. Does that make sense? I hope it does. Okay. The highest home flipping returns in Pennsylvania, Ohio, Louisiana, New Jersey, and Oklahoma. States with the highest average gross flipping return on investment in the first quarter were Pennsylvania, 107.1%, Ohio, 96.3%, Louisiana, 96%, New Jersey just blows me away. Remember when we were talking about how New Jersey was the number one most left state just 2 years ago? 87.1%, and Oklahoma, 85.7%. Among 85 the 85 metropolitan statistical areas with at least 90 single-family and condos homes completed flips in the first quarter, those with the highest average gross flipping return on investment were Pittsburgh, Pennsylvania, with 141.8%, Allentown, Pennsylvania. Pennsylvania's knocking it out of the park in this one. Allentown, Pennsylvania, 122.2%. Cleveland, Ohio, 118.6%. And Philadelphia, Pennsylvania, 111.7%. And then Baltimore, Maryland rounds out the list at 106.0%. So that's kind of stunning to me. Pennsylvania, in terms of focusing in on those regions getting the highest rate of return, or those metro areas, those are some amazing numbers. I mean, being able to crank out 141.8% is awesome. It leaves you a decent amount of margin for you to make a few boners there and make a few mistakes that you need to learn from. According to this report, older, smaller homes were flipped in the first quarter, and I think I think an interesting thing about that might simply be that these investors needed to move more towards those types of homes, so their acquisition costs were lower and their holding costs were lower. The median size of a home flipped in the first quarter was 1,402 square feet, down from the median of 1,409, so not a huge decrease, but a decrease nonetheless. In the previous quarter, and 1,428 square feet a year ago. So definitely a trend over the longer haul of smaller homes. Other high-level findings from the report: more than 2/3, 69% of all single-family homes and condos flipped in the first quarter of 2017 were by flippers who completed just one flip during the quarter. So 69%, it was the only flip they did there that entire quarter. 20% were flippers who completed 2 and 9 flips during the quarter, between 2 and 9 flips during the quarter, and 11% were by flippers who completed more than 10 flips during the quarter. Now remember, a quarter is 3 months, so there were folks out there, 11% of them, who did 10 flips in that quarter. That's pretty impressive. More than 1/4, 26.2% of all completed home flips in the first quarter of 2017 were sold to a cash buyer, indicating another real estate investor, down from 26.3% in the previous quarter and down from 27.6% in the first quarter of 2016. But even that's not a substantial change, right? If you're a flipper, that's pretty much an invisible change to you. You're still selling, you're doing a flip, and you don't even have to worry about financing. You've got people coming in with all cash. About 1/5, 19.2% of all completed home flips in the first quarter of 2017 were sold to FHA buyers, indicating first-time home buyers, up from 19.1% in the previous quarter, but down from 19.4% in the first quarter of 2016. So I don't think that's good news. I think that's relatively bad news in terms of not being able to get this into the hands of first-time buyers. But given everything else we're learning about what's happening with lending, I think lending is going to become a much scarier thing, as particularly once we get past July with the things we talked about yesterday. The storm is coming, and it's going to be one we're going to want to be ready for. Okay. So I think some pretty interesting data there. Definitely the kind of data that should shift your gaze from one place to another. I love that Memphis is on that list. It gives me another reason to go to Tennessee. I'd love to go to Memphis for a week and spend 2 or 3 days in Chattanooga, or 2 or 3 days in Memphis, and just get a feel for the place. To be honest, I think I may have driven through Memphis once, like 20 years ago, but I just don't know the area that well. But when I run the numbers, I love it. And the properties I see look excellent. I'm afraid that I'm being too swayed by my armchair love affair with Tennessee. So I'll have to go out and see it firsthand, and maybe we can work that out this year, and I can finally get myself out there. All right, folks. As always, the sincerest hope is that you have gotten way more value out of the show than the amount of time you have invested. Hope that's true. We always want to get more back in terms of investments, right? So hopefully this show is living up to that standard. Thanks again for listening. I'll talk to y'all next time.